Good evening, everybody. My name is Doug Gollin. I'm editor-in-chief of Private Jet Card Comparisons, and very happy to be with you to discuss bonus depreciation from the big, beautiful tax bill and how it can impact you, and also a little bit about, how private aviation can essentially be a time machine for you. They say that you can't buy happiness, but you can definitely buy time, and that's what private aviation is all about. And so we'll talk a little bit about that. I'd like to start, if I could, by asking our great panelists to introduce themselves, and I'd like to start, if I could, with our hosts from JetLinks, and we've got Paul. So maybe give us a little bit on both yourself and JetLinks, and then we'll go to Matt and Daniel as well. So Paul, over to you.
Yeah, thanks, Doug. Appreciate everybody joining us today. I'm Paul Clowett, the EVP of Sales and Marketing at JetLinks here. So I cover both our jet card and aircraft management sales verticals. JetLinks has participated in the jet card side since 1999 when the company was founded, and have also managed aircraft since 1999, so for over 25 years now, based out of Omaha, Nebraska, and really looking forward to participating in this and learning a little bit myself. So thanks, Doug.
Well, Paul, thank you for hosting the webinar. Matt, let's go over to you, and you and Daniel are our experts. So tell us a little bit about yourself, and then we'll get into the subject.
Thanks, Doug. I'm Matt Mincer. I'm a tax attorney and CPA with JetLaw, with offices in DC and Kansas City. And JetLaw advises and represents clients on both the buy side and sell side of purchasing aircraft, as well as assisting operators operate that aircraft as well. Daniel?
Hi, everybody. This is Daniel Chang, Aviation Tax Consultants. My consulting company has been around since 2003. This is all we do. 100% of our clients have airplanes, and our role is to maximizing tax benefits, sales and use tax planning, some property tax issues. But that's our role, to work with our clients and the existing advisors on airplane-specific type planning. I have an office in Phoenix, Arizona area, and also in Indianapolis area. So we have a couple locations.
Great. Well, listen, thank you, all of the panelists, and maybe Matt and Daniel, but starting with you, Matt. For everyone we've all heard of the big beautiful bill, and we know it's now law, and part of that is bonus depreciation. But maybe you could start like at the private jets go at 45,000 feet, so a little higher than the commercial airliners. So maybe you could start at the high level and just tell us, how it works, and also maybe because we know time is valuable to the people on, just at the very top. And I know there's a lot of the devil is in the details with, tax and private aviation, but a little bit about who qualifies for who would qualify for the bonus depreciation. So Matt, maybe you could start, and Daniel, you could jump in.
Yeah, so qualifying for bonus depreciation, and what does that mean? I think it helps historically to know where we've been and then where we are after the big beautiful bill. So in 2017, with the Tax Cuts and Jobs Act, we had 100% bonus depreciation. And then starting in about 2021, that 100% depreciation started stair-stepping down 20% each year. And so the return to 100% bonus depreciation really means that for taxpayers that acquire and purchase an aircraft and place it into service this year would be eligible for up to a 100% deduction for the acquisition costs of the aircraft. Now, as you said, devil's in the details, and we'll talk about this throughout this program this evening, but it has to be used in a trade or business. You can't just personally buy an aircraft for your own pleasure cruising and jet off to the Caribbean or Europe. That's not business. You don't get to write that off. And you sometimes hear that, like, oh, I get this huge deduction. Well, no, you still have to fall within the framework of the Internal Revenue Code and the regulations to make sure that that aircraft is actually going to be a deductible cost.
Yeah, I mean, so for most of our clients that we deal with, there will be some sort of business owner, maybe a consulting company, could be any profession for the most part, but there's a need for business travels. There's a smell test of sorts as to, hey, why does a company need an airplane? So those some of those details are the planning before the acquisition, and sometimes the answer may be no. You shouldn't be writing off an airplane if there's not enough justification. So yeah, especially depending on the budget. For example, the more expensive an airplane is, the higher the threshold is to support it. So we look at the client's overall tax situation, hopefully the businesses involved and so forth that can help justify the airplane.
Right. And I think, the other thing that I would just add in is there are a lot of people who fly privately for personal use, either owning planes, jet cards, fractional ownership, or charter. So if bonus depreciation doesn't work for you, that doesn't mean that you should stop thinking about private aviation. Um, Matt, let me ask you this. So the bonus depreciation, talk to us a little bit about how it works in year one. And then also, what happens, I know Daniel and you were both saying, business usage, what happens in subsequent years? Do you have to keep up the business usage? How does it work? What are the tests? Is it hours? Is it trips? What are the basics?
Yeah, so there's really three different levels that you have to meet. So the first level is, do you even qualify for bonus depreciation based on how you're using the aircraft? The second level is, do you have enough business use, as that term is defined in the code, to then qualify for it? And then finally, that third level is, how did that personal use or entertainment use affect that bonus depreciation number? So starting at the first level, do you qualify? There's a couple provisions in the code that require that that aircraft must be predominantly used in the United States. And that's a pretty easy test to pass, even if you're taking international trips, as long as that aircraft is returning to service or returning to the US occasionally, you're fine. But for example, there are some purchasers that purchase an aircraft for leasing overseas, Mexico or in Europe, and that aircraft does not come back to the United States, even though it's in registered. You need to analyze if that foreign use is going to impact your bonus depreciation. Secondly, and I think timely, there is a provision in the Internal Revenue Code where the president, through executive order, can pull assets out of bonus depreciation if those assets are being used in economic trade wars. And so we're seeing a lot of this in the administration right now through the use of tariffs, and that may impact, Bombardier or Dassault or Embraer or Pilatus, all these aircrafts that are manufactured abroad. Well, if the president passes this order that says imported goods are not subject to bonus depreciation, they're gone. So be mindful of the current economic situation as well. But if you meet those two tests, it's US manufactured, it is used in the US, then the next step is that you have to have what's called qualified business use. And that is a 50% limit. Qualified business use, and Daniel, I'll let you speak a little bit about what counts and what does not count as qualified business use. But you have to hit this threshold of the aircraft being used in the business. And if you fail that 50% threshold the first year, you don't get bonus depreciation. And Daniel, do you want to speak a little bit more about qualified business use?
Yeah, the the tax code have some provisions that don't always make sense. For example, we run into this situation when we have multiple businesses that are owned by the same taxpayer. For example, even though we are leasing the plane to another business for business use, but that can disqualify. Um, for bonus depreciation purposes because they are not considered what is called qualified business use. So some of the planning structure and the how the airplane is being operated will influence. Yeah, it's not as simple as setting up an LLC or buying the airplane and fly for business right off 100%. So there are a few regulations and that can impact the qualifications. And I know charter is a pretty common scenario out there when we don't fly enough. Hey, let's put it on charter to generate some revenue to offset cost of ownership. But chartering the airplane, especially in the first year, can limit potentially the amount of depreciation that is available because some of those could be allocated as non-active passive losses, for example. So there are a lot of different rules that will come into play in terms of planning and determining the qualification of bonus depreciation.
And so,
Dan,
Daniel, you know, so tell me if this is right. I have $60 million in operating taxable income for my business. I buy a $20 million plane, just very top line. The idea is that if I use that plane 100% for business this year, I would be able to take the whole $20 million and depreciate it this year. Is that correct?
It can be very well be correct. Yes.
Okay.
So your taxable income goes from 60 million to 40 million. So there's a $20 million tax reduction of taxable income. Yes.
And so I want to bring Paul in. So I have that scenario, maybe I'll win the lottery. So I have that scenario. I have the plane. I'm going to buy it. Business, I got it. It's got to be business. But I want to go, Thanksgiving, the holidays, personal travel. What happens, how would Jetlinks deal with that? I mean, I obviously want to get the bonus depreciation, but is that something that you've handled in the past? How do you work that with somebody who's buying a plane, but then they can't use it to, for the holidays, since we're talking
yeah,
about the fourth quarter?
Yeah, and absent, Doug, playing the lottery being your primary business use across many states, that would, be a little bit problematic. But Daniel, just real quick, I
Yeah.
wanted to clarify one point that you made, which is when you talk about the first year, that doesn't mean a 12-month look ahead, right? That means a calendar year, right?
That's for the most part, most taxpayers have December 31st calendar
Yep.
year end. That is correct. So that's
Perfect.
why, yeah, late years in the fourth quarter, we may be only managing the remaining 2, 3 months of the year in terms of how the airplane is operated. That is correct.
Right. So let's take that example and apply it to where Jetlinks can help. So if you think about that, well, I have this one business trip that I want to put on the plane that was put into service before December 31st, 2025. That's great. Oh, at the same time in December, I've got two personal trips that I want to fly my family somewhere on my plane. But I don't want to upset this balance of qualified business use for my aircraft. That is something that we at Jetlinks deal with, day in and day out. This is absolutely our bread and butter, and that's where the Jet Card product comes in and can be so valuable. With over 100 aircraft that we have access to and manage, and 1,000 Jet Card members, this is something that we deal with every day, and we have a fleet that would absolutely satisfy that for your personal needs with the Jet Card, where, after you turn the calendar over, okay, now I've got a full 12 months to play with, and I can better balance that out, right? And one thing that Jetlinks really excels at, just given how long we've been in business, and over the 26 years, we've really refined our record keeping, our processes around data and data retention. We are very keenly aware of this topic, and you'll have passenger manifests. Well, you'll have access to all the data that you will need to provide to somebody like Daniel, to provide to somebody like Matt, in order to answer some of these questions and ensure that you are remaining in compliance going forward, both this year and for any future years.
So the answer is sort of, I own my plane, but to keep the 100% business deduction for this year, I could charter or use a jet card for those personal trips, and
Exactly.
That would keep me okay with the IRS then.
Yep, keep you off your plane.
Gotcha. Okay.
And
What
Doug, I'd
about?
just like to
Yeah,
interject
yeah,
real quick there on
yeah,
a couple two key
yeah.
points
Please
there.
go ahead.
When we put the aircraft into service, it's not necessarily when you buy the aircraft. It's when that aircraft is ready to go for the business purposes that you intend to put to use for. And so occasionally the service has made a big stink about you buy an aircraft, but it's down for maintenance for 60 days because perhaps you're retrofitting the cabin, perhaps you're getting internet put on there. Whatever you're doing post closing on maintenance or refurbishment, the service has said in some cases that it's not placed into service until that work is done, it's operational. And so, again, if you have a Q4 closing, be mindful if you've got post closing refurbs or maintenance or restrapping a transponder, because that can catch you off guard, and that hasn't been as big of a deal because bonus depreciation has been stair step down over the last 5 years or so. The second point I wanted to make too is that not all business trips are business trips. And so, for example, if you, with your $60 million of income and $20 million jet, you fly all business trips, well, that's QBU, that's business. But if those trips have an entertainment component to them, you're taking your best clients, your best vendors down for a golf trip or a hunting trip or fishing trip or take them down to the Super Bowl. Well, that entertainment counts as business use, but you can't deduct that entertainment cost related to the business trip. So again, it's very nuanced into how business is treated. And I just want to make sure that everyone was aware that business means true business, right? It's meeting with clients, it is talking to investors, it's actually boots on the ground doing business as long as there's no entertainment related to that trip.
And I imagine, and I know we have a limited amount of time. Record keeping is important, and the details matter. If I take one of my kids who's going to college on the flight because it's in the same direction, all of those things matter.
Yeah, for sure. And the tax code actually has a favorable aspect of the on what we call personal non-entertainment trip. An example of dropping off a kid in college actually can qualify as non-entertainment, assuming we don't stay over for the football game on the Saturday afternoon or something along those lines. Or if you have attend a funeral, let's just say, certainly as a personal event, a personal use of the aircraft, but it could be considered non-entertainment. So there are still angles to deduct anything non-entertainment. So there are some planning opportunities. A lot of times we entertain these, well, maybe not use the word entertain, but we answer these questions from clients on a regular basis. Hey, we have this trip planned next weekend. How do we do this? Or what should we be thinking about? How to document things? Um, and the ongoing record keeping you mentioned is certainly the most important aspect in case there is an audit. Now, back up a little bit in terms of structure and planning, the idea is actually to avoid being picked for an audit, obviously. So if we don't have to answer an audit, we don't have to worry about all the details, but the record keeping certainly would become the most important aspect in case of an audit, and how you document and support these flights as business, any record keeping requirements and who you met with and why and so forth. Those are very important in terms of winning an audit. So that's certainly something that we harp on with our clients on a regular basis.
And Paul, you had been mentioning when we were talking before this call, and I think it would be, it sort of ties with what you were talking about, Matt. You'd mentioned installing things after you buy the thing, but buy the jet. But, bonus depreciation, I put new Wi-Fi in. There's expenses for pilot training. Is there an opportunity to use the bonus depreciation beyond just what you're paying for in terms of buying the aircraft?
Yeah, and I'll defer a little bit to Matt on that, but one of the things we talked about was, okay, I just bought this plane. I perhaps I paid a brokerage fee. Perhaps I, did a new interior. What all is encompassed in that, that the cost of the acquisition of the airplane and some of the ancillary things. I think what Matt mentioned is that sometimes those can be included, but I'll defer to him on what that list might or might not look like.
Yeah, so, and you hit it right on the head, Paul. It is acquisition costs. So costs that you incur to purchase that aircraft, including the retrofitting or refurbishment post-closing. So the attorney fees, happy to get paid, and you can deduct my fees from bonus depreciation. But also, again, if there's brokers that are involved, if there's any taxes, sales tax or transfer taxes, those get lumped into the cost basis of that aircraft. So really, I think it's fair to say that any expense that you incur to either acquire or to develop that asset are going to be includable as your basis for purposes of bonus depreciation.
And I think one of the things that we were talking about is this year getting it in. But what about in subsequent years when I own the plane? Is there some benchmarks in terms of how much business usage I need to have going forward?
There is, yes. So again, the key criteria is that you must have 50% qualified business use, and that's again a term of art. For every year that you own the aircraft, if you're flying Part 91, let's call it 7 years. And if you fail that test in any year, then there is what's called a recapture event that occurs. And so what that recapture event means is that you took that bonus depreciation year one when you're entitled to it, great. Well, year three, you just use it all for personal purposes. You have to recapture that excess bonus depreciation that you took. And what that means is that you have a large income event that you have to recognize in that year. And so it's prorated over that 6-year useful life of the aircraft, but you may have a $20 million deduction in year one, but then have to pick up income of it's called $10 million in year three, halfway through. And so it can be very perilous to not keep records, one, that those future years, and two, use the aircraft in that qualified business usage for at least 50% of the time. And that time can be measured either based on flight hours or miles. There's a few different ways that we can track the usage, but you need to have business usage throughout the use of that aircraft.
And
The
I'm
the
sorry, go
ongoing
ahead,
business
Daniel.
use, the ongoing business use is important, as Matt refers to. But I mean, things do change sometimes for any number of reasons. Maybe you decide to retire early, and so yeah, if business use drops below the 50% minimum, you will have to repay it. So sometimes in terms of planning, bonus depreciation is great. You know, it's a great incentive to take a bunch of deductions, but there are some strings attached. And it's not unusual for sometimes for our clients to say, nah, we don't want to be under pressure to maintain that 50% every year. So maybe we decide to forego bonus depreciation and just depreciate the airplane on a regular basis or straight line basis. So every person's situation is different. So some of those certainly could be a valid consideration whether to take bonus depreciation or not.
And this is maybe a question that's uh, not possible to answer on a call like this. But I expect to keep up the business usage. But 2 years from now, someone makes an offer I can't refuse, and I sell my business. Am I now at a disadvantage because I took the bonus depreciation, or is it just giving back what I got, originally, and it would have been 6 1/2 dozen if I didn't do it.
Uh, I'll say that it can affect valuation depending on how the company sale is structured. And so you'll typically see most company sales structured as asset sales. So I'm not buying your stock or your LLC interest. I'm buying the assets out of that company. And I, as the buyer, want to do that because then I can depreciate that aircraft when I buy it. But when you sell me your aircraft, well, you've got to recognize all the income on the recapture based on what you've sold it to me for. As opposed to a stock sale where I am buying your stock, I'm not buying the assets. Well, I can't write off the cost of acquiring that stock. It's a capital asset, and so I'm stuck with it. So depending on the tax attributes of the assets, and frankly, an aircraft is one of the largest assets on a balance sheet in most companies. So it can impact both the sale of the business and the taxation of how that sale results.
I was going to keep my plane, but I understand.
Yeah,
Um,
in
yeah,
terms of planning, and we are dealing with more and more of our clients selling their businesses. Um, like everything else, the earlier we get involved as the aviation advisor to even help, maybe not directly help negotiate the deal, but to help recommend what structure that can preserve the deductions. Um, like Matt was just referring, hey, if they're just buying our assets without the airplane, maybe we can keep the same ownership structure without changing things. Then we don't have to sell the airplane or spin off the airplane, LLC, for example. Then we don't have to recapture the depreciation until the time we sell the airplane down the road. So there are a lot of things that can happen, but it also happens that I get the call and say, well, we just signed a deal last week. We already sold the business. At that point, there's not much we can negotiate. And so it is getting to be a very common discussions with the way private equity is coming into buying businesses.
and I want to two more quick ones, but and we had talked about this a little bit before this presentation, Matt. We're talking about bonus depreciation, federal taxes. are state implications? How does states, how does that impact this?
Yeah, so the big beautiful bill is a federal bill, right? Doesn't impact the states whatsoever. And so some states will piggyback off of the federal tax code. And so whatever your adjusted gross income is for federal purposes, you just start there with your state taxes. But not all states are like that. Some states have their own tax code. For example, California. California has decoupled from the federal regime, and there's not a bonus depreciation structure in California like there is at the federal level. And so be mindful that whatever state you're located in, that you may have bonus depreciation there because it piggybacks off the federal regime, but you may not. And so if you're budgeting and trying to figure out what the cost of the aircraft will be and what the tax impact will be, talk to your tax advisor and just make sure that that state tax component is considered as well.
Right. And Paul, I wanted, we've been talking about timing and, getting it done and getting the plane in service this, by December 31st to take advantage of this. But talk to us a little bit about, the time it takes to buy an airplane and the process, the steps going through, because I think, this isn't one of those things where you could like go to the car, to the car dealer on December 30th and give them the money and do it. This takes a little bit of time to buy an airplane, right?
Yeah, exactly right. So now is the time absolutely to start thinking about this, Doug. You nailed it there. If you think about just the timeline for an aircraft purchase, if you do not today have a broker engaged, that is something you will want to do immediately. If you're interested in taking advantage of bonus depreciation, you think it may apply to you, you have a large taxable gain, you have qualified business use, check those boxes. Daniel, Matt, those are the experts that can give you insight into that. Okay, check that box. You call me, you call JetLinks. We can help guide you through the acquisition process alongside your broker, tax attorney, tax advisor, et cetera. So if you're actually going out looking for a plane, maybe it's 30 to 45 days. Inventory levels are pretty consistent right now with what we've seen over the last 2 years in terms of what's available for sale in the market. And that might take 30 to 45 days. There's another 30 to 45 days that are going to be required for pilot training, pilot hiring, and going through that process. And then the final one will be actually putting that aircraft into service. So if you think about that, I think I just outlined about 90 days. The longer you wait here, the more competition, the more people that are going to be putting in offers. Really important that if this is something that may apply to you and something you're interested in taking advantage of, the time is now to start moving on it. No doubt about it.
Gotcha. I think the other thing too is, you know, is if flying privately makes sense to you, the bonus depreciation is great, but flying privately is still going to make sense to you. And, I talk to a lot of our subscribers. Some own their planes, have fractional ownerships, jet card and charter. And, they're not flying privately because of bonus depreciation. They're flying privately because there are airports closer to where they're leaving from or going to, so they're saving time instead of going to the airports where the the scheduled airlines are flying from. Uh, they're flying privately because they're not connecting in a hub like Chicago or Dallas or Atlanta. They're flying nonstop from an airport closer to where they are and, going closer to the destination. And so, what I sort of said at the beginning, it's a time machine. So I think, one of the things, and, panelists, you could disagree with me, is, beyond the tax benefits, flying privately, once you start, you don't stop. And I could say the research with our subscribers at Private Jet Card Comparisons, and 80% are programmatic flyers, so they're in a fractional or a jet card program. But 95% of our subscribers who started flying privately, during or since COVID, are continuing to fly privately. So the only warning I would give to the listeners is once you start, you're not probably going to stop. I know everybody has time constraints. Our audience time is money. That's why they want to fly privately. So just one last round, and maybe we'll start with you, Matt. Anything that we haven't talked about that you think is important for anyone listening to this to take away, or
Yeah,
things that we haven't talked about?
two quick things. I think to Paul's point, Daniel's point, get advice before you do the deal versus after, because you can't fix it once all the paperwork's signed. And aircraft structuring has a lot of push and pull. What works for the FAA doesn't work for the IRS. And so you want to make sure that the structure that you've developed check all the boxes that you need to. Am I getting the qualified business use? Am I trying to mitigate state sales taxes? There's a lot of interplay between the various regimes, and you need to figure that out before you buy it. Secondly, for those listening, there's really three rules, three F's. No fun, no family, no friends that first year. You want to capture all of that bonus depreciation, and any sort of entertainment use or personal use will adversely impact the final number that goes on your deduction. So business use, first year, go have your fun elsewhere. Talk to Paul. He can hire you a charter jet and get you where you need to go during that first year.
Yeah,
Daniel?
fun, family, and friends. We love that on the jet card side all day.
Daniel?
Yeah, planning and do it timely, especially if 2025 deductions are important for your tax situations. December 31st is coming up quickly. So, and getting the right people involved, make sure, I mean, and what I just like hear a lot is people getting bad information out there, whether it's from their friends, from the buddies and whatnot. Hey, I did this, I did that. And then when they come to talk to us and they say, oh, really, get that surprise. So get the right people involved early on and make decisions with the right information. So hopefully we can help you folks out on that.
Paul?
Yeah, I would just echo what Daniel said. I mean, there's a level of sophistication and expertise that's required if you're thinking about an aircraft transaction. There are people in the industry like Daniel, like Matt, who this is absolutely what their expertise is in. We at JetLink's expertise on the aircraft management side, on the jet card side, on delivering exceptional customer service. There are plenty of resources out here, and we would welcome any conversations about that, and would be happy to connect you with any of those folks who can provide that level of sophistication that's required for something like this.
And Paul, I appreciate you and the JetLinks team putting this together. And I echo what everyone was just saying. We actually have a section in our on our website. I think the title is "You have the right to an attorney," and I think that's it's expensive, especially if you make mistakes. And I think that's where engaging professionals early on in the process, really helps you navigate those obstacles and things. So I hope this has been educational and informative, and I hope we see you out at the FBO and out on the tarmac. And if you're not flying privately, that you consider it, because it's a great way to go. And it won't add years to your life, but it'll add years of enjoyment to your life. So thank you for joining us.